Sempre me perguntam qual é o futuro do dinheiro. O dinheiro hoje representa 40% dos gastos das famílias. É um volume muito expressivo aqui no Brasil. Existem alguns países do mundo, por exemplo, os países nórdicos, onde o dinheiro tem prazo de extinção. Tem países onde eles já definiram que até 2030 não terá mais circulação de dinheiro, somente os meios digitais. Aqui no Brasil, esses 40% são representativos e a nossa expectativa, nós como GetNet, nós acreditamos que o Pix terá um papel muito importante em reduzir esse valor de dinheiro em circulação. Nós não temos dúvidas que o Pix pode ajudar a reduzir os custos. Nós sabemos todos que nós temos custos de transporte de moedas, custos de reposição de moedas, assaltos, violências, uma série de custos, né, que nós chamamos aí de parte do custo Brasil, e o Pix tem aí um objetivo. Então, nós, GetNet, acreditamos que aqui tem uma oportunidade de melhorar a eficiência no Brasil. Nós estamos vivendo no país um momento muito especial. Tem uma série de projetos definidos pelo regulador entrando, como o Pix, como a Lei de Proteção de Dados, como a Circular de Recebíveis, que regulamenta toda a parte de recebíveis digitais no país, o Open Bank. Eu não tenho a menor dúvida que este evento com o Exame pode ser um grande alavancador de um debate profundo e vai ajudar a esclarecer uma série de dúvidas para todas as pessoas e fortalecer alguns conceitos também sobre todos esses temas regulatórios que estão no mercado.
Olá, boa tarde a todos, sejam muito bem-vindos aqui a mais um evento do Future of Money. Eu sou Felipe Serrano, sou editor de tecnologia e inovação aqui da Exame. Hoje é um dia muito especial porque a gente está lançando, inaugurando oficialmente o Future of Money, que é um novo canal hospedado dentro do site da Exame, voltado especialmente para cobrir os tópicos ligados ao futuro do dinheiro. São mais de 15 colunistas convidados que vão contribuir mensalmente com as ideias e opiniões. E por ocasião desse grande lançamento, a Exame reuniu os maiores especialistas do Brasil e do mundo para debater o futuro do dinheiro em um grande evento online que começa hoje e vai durar até o dia 30 de novembro. Vão ser 8 semanas de discussões sobre os temas mais variados desse tema, fintechs, open banking, cibersegurança, PIX, criptoativos e tudo que envolve esse grande universo. E como parte da nossa programação, hoje às 19 horas, vamos ter uma conversa com Gustavo Franco, economista, fundador da Rio Bravo e ex-presidente do Banco Central, e uma conversa também com alguns colunistas do novo Future of Money. Para agora, a nossa conversa, o nosso bate-papo é com o Gavin Littlejohn. O Gavin é chairman da F-Data e foi nomeado como coordenador da Fintech Stakeholder Group, da UK Open Banking Implementation Entity, em 2016. O Gavin é conhecido como fundador do Money Dashboard, onde ele atuou como CEO até 2015 também. Antes da gente começar a nossa apresentação, eu queria deixar um recado para quem tiver dúvidas, quem tiver perguntas para o Gavin, para escrever na nossa caixa de comentários aqui do lado, que ao final da apresentação a gente vai ter uma sessão de perguntas e respostas e eu vou fazer essa moderação, essa conversa aqui com ele. Então, dito isso, eu vou passar para inglês e chamar o Gavin. Okay, so now I'll switch to English and welcome our guest here today. It's Gavin Littlejohn. Gavin, thank you so much to be here with us. So it's a pleasure to have you here. So the stage is yours.
Thank you, Philippe. Much appreciated. So today I'm going to spend a little time introducing the topic of open banking and open finance. We're going to walk through it nice and slowly. I'm going to explain really what it is and what it's used for. And then I'm going to talk about some of the legal and regulatory frameworks, some of the things relating to the technologies, and the experience we've had in implementing open banking and open finance, not just in the UK, but across many markets. So my name is Gavin Littlejohn. I chair the Financial Data and Technology Association, which is a trade association that focuses exclusively in the domain of open banking and open finance. I've been a fintech entrepreneur for my whole career, and in 2005, I set up a business called Money Dashboard in the UK. That business was designed to enable customers to see their financial affairs from across all the different providers that they were connected to inside a single dashboard. It used a technology which is fast becoming out of date, but nevertheless, it was in the market and able to take data from a variety of actors when the end customer provided their permission. But before I get too deep into that, and really just wanted to give an overview of the trade association I chair. So in 2013, when the second Payment Services Directive was being negotiated in Europe, I was asked by the UK Treasury to contemplate forming a trade association to give the banking sector and the regulators a party representing the fintechs to negotiate with. That was formalised in 2014, and then it was set up in Europe in 2017 in the European Union and broader European context, and then in North America in 2018, and then in 2019 in Australasia and parts of Asia, and this year we set up in South America, led by my colleague Bruno Denise. So going back to the topic of open banking and open finance, I like to think of this as the customer permissioned sharing of data assets that belong to the customer. This is an important point because in 2013, when this was negotiated in the European Union, there was no Second Payment Services Directive and no General Data Protection Regulation. In Brazil now, you have started the process with LGPD, and followed by that, the new Brazilian open finance policy that's been developed by the central bank. Really parallel tracking to what's developed in Europe and what's developed in India, in Australia, and now in Canada, and in markets all across the globe. I like to think of open banking and open finance as a little bit like electricity. You don't consume open banking directly. You choose an appliance that connects to it, like a television or a refrigerator. So what you're doing through open banking, or its wider context of open finance, which includes loans and mortgages and investments and pensions and savings products and general insurance products, is you're able to select which applications better serve your needs, whether you're a consumer or whether you're a business. And then with your freely expressed explicit consent, choose to share information with another party who may better meet your needs. So why would you want to do this? Well, as financial products are getting increasingly sophisticated in the data and using algorithms, and where there's incredibly complicated and varied pricing models, and where your own financial relationships are several, and your ability without professional financial advice, which only a very tiny percentage of the population could afford, without any of those things in place, the complexity for you as a consumer or a small business in being able to find your way to the correct product that meets your needs in a convenient way with the correct price point and being able to easily interact with an alternative are problematic. So being able to choose to share your data with another actor gives you the basis to get an improved experience and enables another actor who may not be the incumbent provider of your financial service to have an opportunity to compete. All across the world, the level of financial sophistication amongst big companies that provide financial products is increasing by the month and by the year. And without putting the sorts of tools and capabilities that you can carry in your pocket in a mobile device, without empowering that with the free flow of data that pertains to you as the data subject, the ability for you to find your way to the better product is substantially restricted. So let me move on now and try to describe in a broader context what the difference is as we move through from my electricity analogy to the global context of firms that are operating in this domain. So all across markets, companies have taken on the role of being what is called in the third-party role, third-party provider role, sometimes referred to as the fintech role. In Brazil, a data recipient institution. And those firms have been building business models. They're very varied. They range from money management apps, like some of the ones I've been involved with, through to use cases that are involved to assess affordability for lending, including for people who've got a thin credit file. There's also firms using open banking data to generate files which help small businesses execute their accounts using an accounting package, typically a cloud-based accounting package. There is a variety of firms that are offering retail and marketing preferences. There are other organizations that are using the data to generate pathways to better savings and investment experiences. There are firms that are providing services to banks and other big lenders to help them to get really good at understanding customer behavior and of making more appropriate and more informed lending decisions. We can see, whilst the scope in the European Union was initially restricted to payments by virtue of being attached to the Second Payment Services Directive, which enabled third parties to make payments and to move money, which are things which are similarly contemplated by the new regime in Brazil. We can see that the other markets have looked at what happened in Europe and in the UK and basically taken the decision that why, if the customer has rights in their data, could they not freely express those rights in other financial products? So we can see then, very simply put, there are 7 stages to delivering open banking and open finance. The first is the customer data right, without which you cannot really get to the second stage. When we set up open banking in Europe, at the start of the process, many of the banks were arguing that the data, which we now think of as pertaining to the data subject, actually belonged to them as the bank. So with your new Brazilian LGPD, you now have that clearly understood that the data belongs to the end customer, the data subject. And that was an important point. In Europe, we had GDPR, which is similar, and that made it clear that the customer would have rights in the data. The second point is being able to express that through explicit consent, which can be both freely given and taken away. And it's been made very clear in the Second Payment Services Directive that the company who's acting as the data recipient should make it very clear to the customer what it is that they intend to do as a business model and what data they need to perform the business model. And therefore, the data recipient shouldn't be taking data for any other purpose than to perform the business model and not take more data than they need. I also mentioned that the right can be taken away to have the data, so the explicit consent can be removed. The one thing that people need to be mindful of, though, is in financial services, if that data has been used to provide an application for a financial product, the provider of that product will have a duty of financial record keeping. So the right to be forgotten and in the privacy law that you have, and as we have in Europe, is slightly restricted by the legal requirement to record keep. The third area, and by far the hardest to get right, and I have to say, I don't think many countries have come anywhere close, and certainly in the UK, we've still got quite a long way to travel, which is the liability framework. How do you set up something that where you move from a linear market where one customer has a relationship with a product provider to an alternative reality where one customer can choose to share the data from that provider with multiple other actors? It creates a further requirement for the regulators and lawmakers to think about under what circumstances the customer would be made whole if the data recipient institution is hacked or in some way misuses the customer's data. What is the value you place on that data? How much compensation would the customer be paid? How do you prove which actor was responsible? And how do you orchestrate an ecosystem-wide capability to look after those customers' needs? These are tough questions, and we're currently facing into these in the UK with some dedicated work streams, but I won't say that they've been easy questions to answer. They've been quite complicated. And then going beyond the explicit consent and the customer data right and the ability to create a proper liability framework, you then have to create a legal and regulatory context that enables those first three actions to be given force and to be enforceable, and to ensure that the open finance market is not a free-for-all. It's important for everybody to understand in the word open, it simply means open market architecture that the customer has the freedom to choose. It doesn't mean that it's open to any business to operate in. You have to apply to the proper regulatory authorities to get permission to operate in this market. And obviously you need to have the legal framework in place that sets the rules whereby data recipients can enter the market. And then beyond that, we've got the high-level architecture. You've got the, which I'm going to come on to talk about in more detail. You've got the governance and funding. So how do you make decisions? How do you fund open banking and open finance? And then beyond that, again, you've got implementation and performance monitoring. But before I get on to those slightly more complicated areas to think about, let me just return to the Data Donor Institute, the big bank, the big insurer, the big fund manager, the parties that have lots of financial data. What's in it for them? So if you were to go to marketing school on your very first day, the first lesson you would get is get to know your customer better, or where is your customer when they're not with you? Because you don't have a right to have a customer. The customer is with you because of their own free will. They've signed up for a product or service that you've offered. And they have the right to take that away. But in a market where the customer has been, particularly using the internet, trained to shop and to find a variety of financial products, we have to understand that you're, as a large institution who would typically be in the data donor role, you also have the opportunity, based on reciprocity, to also occupy the role as a data recipient. So if anybody ever asks what value is it in it to a data donor, well, everybody in the market should be a data donor, and everybody could choose whether or not to be a data recipient. And if you're a large institution, you get to choose whether or not you wish to be a data recipient. And if you think about this as a large institution, rather than looking at it through the lens of just compliance, but looking at it through the lens of what is the opportunity for us as a company, then you very quickly get to the view that I really want to know, as a big business, where my customers are when they're not with me. What other financial products have they got? What is their income? What is their expenses? How good a quality is my loan book? Will that customer be able to sustain their investment profile? What other risks are underpinning or threatening that customer? Are they getting better value from other places in the market? What is their switching propensity? So all of that data is revealed to the institution, not just through the data that they hold on you directly, but through the other data points that they can get about you from across the market. And that will enable that entity to manufacture products that better meet your needs, be more responsive to your needs, and hopefully, rather than just thinking about creating more friction to stop you from moving to a competitor, that they actually think about how I can provide to the customer more value. And for those reasons, there are things that you can do through open banking and open finance that make the whole process of distributing financial products, new financial products, much more efficient and much more accurate, much more likely to treat the customer fairly, because you fully understand all of the range of different financial capabilities that the customer has. And for those reasons, large institutions, even though they have to act as data donors, can also get great advantages from acting as data recipients. But of course, it's the fintech startups who have blazed the path here, who've shown what is possible. And what we're seeing now in the UK and across lots of other markets, US, Australia, we've seen a wave of consolidation. A lot of the fintechs who were startups just a few years ago have made large sums of money through generating value, and have been acquired by credit reference agencies, by some of the big card schemes have been very active. We've seen a number of the big banks, big insurers, big fund managers start to either acquire, but very often partner with the fintechs. There's a wave of use in the UK where the open banking standards have become really quite high, of using the data for better credit scoring and lending situations. And we can see lots of the big banks have partnered with innovative fintech companies and credit bureaus to show them how to get a better understanding of how to reach customers in a better way and make better decisions around lending. So that's quite an exciting development. I'm going to go on now to just talk about the experience we had in the UK, because compared with European Union, we had a slightly unique experience in that the UK's competition authority required the 9 largest banks in the UK by small to medium business and consumer volumes to work together and fund an implementation capability. And in the early period of this, we went through what I can describe as a quite chaotic period for a few months, because everybody wanted to rush ahead and hit deadlines, and the work developed in silos of activity, and the efficiency with which plans were made and executed was not as it was later in the process. And we had to learn as an industry between the regulators, the big banks, and the fintechs to work together and to work on solutions. A governance framework was set up that had all of the regulatory authorities in the room as observers. We had all of the big banks represented, the fintechs represented, and we also had consumer and small business representatives to make sure that the things that needed to be done to look after their interests, such as a proper liability framework and method of redress if things went wrong, were properly put in place. So as we went through the development, a few things that we learned, I think, that were really rather important. The first is that there's a material difference between specification of a technical standard and standardization. When we went live in January 2018 in UK open banking, the large banks had all written to the government and had attested that they had conformed to the specifications that they'd been given. And when the fintechs started to build against these interfaces, even the very small number of fintechs who were through the new regulatory process for accreditation to be in the market, we sort of reached the position where we recognized that it was taking a very long time for the fintech to connect to the bank, resulting in a very labor-intensive process on both sides. And what we did then was we introduced something called the financial grade API. So the financial grade API works on a mixture of OAuth and OpenID Connect. So if you were to sign into a website using your Facebook account or using your Google account, that's OAuth. And on top of that is a framework or a scaffolding which enables various claims and data parts to be put in, which are used for identity or for passing and exchanging packets of data in given fields. That's the OpenID Connect framework. And there are things that are built between the fintech and the bank even before the customer is present. That proper connection is made. I mentioned earlier the analogy of electricity. I want to use that again. So we created for the UK something called the trust framework. It works a little bit like a directory of who the regulated actors are. And if you think of it in your mind's eye as being a little bit like a safe, a physical safe that you would find in a hotel room. And inside that is a bank of electrical sockets that's clearly labeled with Itaú or Santander. And when you're a fintech, you're given permission by virtue of being regulated to get into that safe. And inside that safe is the bank of electrical sockets. And as the fintech, you come with your electrical plug and you're allowed to plug into all of the bank's sockets that are inside that safe place. So that is the trust framework that was developed for UK open banking. It uses the OpenID Foundation's financial grade API, and it enables the connections to be made securely and to be made easily. And I've over the last few years, working with the Central Bank of Brazil in the design thinking, strongly recommended that the FAPI security profile and the methodology of using a directory and the ability to sign into that directory using software statements and to make those easier connections and more stable connections is the way forward for open banking, open finance. It becomes very scalable if you're a fintech as a data recipient institute, or if you're a data donor. You can know very clearly if you're compliant with a standard. In the UK, we built a conformance suite to test whether the market participants had reached the required standard, which algorithmically discovers the surface area of the API and enables the party to know whether they've reached the required level. And then that conformance suite was then gifted back to the OpenID Foundation to maintain. That's the international not-for-profit entity which had designed the security profile that we were using. So at this point, we've got the data donor and the data recipient connected. And then what happens then is the end customer would choose which data recipient they wish to share data to. They would consent to the new business model. They would provide consent for the data to be shared with that data recipient, who would then send them through the API onto the digital real estate of the data donor, where the customer then continues the consent journey by authenticating that they are who they say they are using the bank's typical login criteria. And then the packet of data that's been required by the data recipient pops up. They simply tick a box to say, yes, that's the data I wish to share with that party. And they get then sent back through the API back to the data recipient, who then continues to load the data that gets downloaded at that point from the data donor. So it works very, very efficiently for data sharing. It's been slightly clunkier for the other element, which is the data initiation, the payment initiation, simply because in our payments lives, we're used to journeys which are very low friction and very easy. We've had to work quite hard recently in trying to make the payment initiation journey a bit like whipping out your bank card and just typing in the 16-digit number. It's got to be as easy as that for it to be a competitor to the pay by card environment or card on file environment. So one of the things we've done, of course, is standardize the technology. Then we had to work very hard on the implementation. So did the donor have the correct levels of responsiveness, of speed, of download time, of availability? And that's taken a while to stabilize. I would say the first year of open banking, there were a number of things where there were breaking changes in the technical implementation. But the vendors to the large banks have become much better at implementing this stuff. And the qualities of the API gateways are pretty solid. The banks have had to invest a bit of money in their back-end technology to upgrade the capabilities, but many of the banks would have had to do that anyway because some of the technology was becoming a bit old and out of date. The other thing that we worked quite hard to standardize on in the UK was the customer experience guidelines. What happened, again, going back to when we went live in January 2018, it was just web-to-web journeys. And of course, most of the fintechs are mobile app first now, so it's quite a weird experience. But one of the banks had implemented a web journey, which in their bit of the consent flow for the authentication and authorization had 16 pages of fresh HTML load to complete the journey, and they'd put a 5-minute timer on it, which meant it was virtually impossible for a consumer to get through that journey. And as a result of even though the banks had tried to comply with the technical qualities and the technical standards, because the customer experience in the redirection model when the customer came through the API was still theirs to decide, we had the capability in the UK to require the banks to then build a proper customer journey, and the fintechs had a role in helping to design that, so that we got to a point of a standardized and what has proved to be a very slick journey. The conversion rates went up immediately about 40%, so we knew we'd managed to get quite a lot of that right. Where we are now, going back, so we're now 2.5 years past the go live date. When we first started, for the first few months, there was only sort of 8 data recipient companies in the market that we're trying to connect. There are now hundreds. The flow of venture capital into this field and the rate at which acquisitions and partnerships have unfolded has been like nothing anybody has seen before. Billions of pounds or dollars has flown into the domain, and the speed of innovation is very, very useful. And of course, in all markets that go into this new domain of open banking and open finance, there'll be capital deployed, there'll be partnerships made. People will have to learn again how to compete for the business and how to innovate. And all of that competition and innovation and reduction in friction and better user experiences and better value are going to be really important for Brazil, for Brazilians, and for the economy at large, and most importantly, to drive better customer outcomes. So I'm going to just cover another couple of topics at a high level, and then I'm going to move on to taking some questions. So if you do have questions, please do send them in to the moderator and get your questions ready now. When we were thinking about all the different structures that were needed in the development of open banking and open finance, and all of the complexity which I've tried to lay out for you today in as simple way as I'm capable of, we recognized that there were some issues in the market which appeared to be only solvable through collaboration. And I mean collaboration not just between firms, but between firms and governments, and between regulators and firms. We recognize that there were requirements for market participants in this domain which were really difficult to overcome. One of which was the ability for you as a new entrant or an entrant entering a new market vertical or a new geographic market to get access to the sorts of data that you would need to train your algorithms. Because you see, the customer has got no vested interest in giving you their personal and financial data unless you can give them a product in return, which has made it a barrier to entry for new innovation. So we've sought to collect in a new global open finance center of excellence, which was recently funded, to curate suites of data on vast supercomputing capability to enable firms to model and test new prototypes and to do market sizing and proving, so they can more quickly get to product market fit, which is essential for the investment experience. The second thing we wanted to look at was creating a global economic observatory, sort of a longitudinal study of how humankind earns, spends, and saves through the lens of both consumers and businesses, so that we can look at things like how people save for long life, what impact expensive credit has on young people, or whether people are buying property or renting, and what the drivers are of those things. Since the beginning of the health pandemic and the economic consequences that followed, this new Centre of Excellence, GovCo, has been curating data sets to provide into the UK government, which have been monitoring the health of the SME and from a solvency perspective, the small to medium business, from a solvency perspective, and then also looking at the new types of vulnerability in consumers, as many people have lost their jobs following the economic crisis. So we've also looked at things like algorithmic bias and discrimination. We're starting to look at the development of technical standards and trying to make sure that technical standards that we've evolved in the UK and now in Australia, recently adopted in the United States, those sorts of technical standards that are being evolved are are technical standards which are easily shareable, easily copyable. So we're trying to get to a position of developing an international framework to improve the interoperability of API technology between markets, to reduce cost, to improve security, to reduce the engineering overhead for all the market participants. And we're also looking at economic crime. So obviously, as financial data gets shared and it gets used to improve people's financial life, it also creates other opportunities for criminals to try and attack in different ways and to generate different types of fraud. So the new Centre of Excellence is going to look at those different types of fraud and try and provide an educational resource and some practical resources to help the market to properly address those new issues. So with that, as my final point, I'm now going to hand back to the moderator to pick up on any questions. Thank you.
Thank you so much, Gavin, for sharing your experience here with us. It's really outstanding to see how the UK is implementing open banking. Gavin, we have a few questions here for you. But before we start, I just want to tell our audience, if you do have some questions, please write to us in our comment section, and then I'll ask Gavin here. So, Gavin, I just want to add, you talked a little bit about this in your talk. According to the experience in the UK, what are the actual main practical changes for consumers and businesses with the adoption of open banking so far?
So let's start with businesses. Just under half of the businesses in the UK, about 40%, use cloud-based accounting software to manage their accounts. Those cloud-based accounting packages have all integrated with open banking. So now if you're in a small to medium business, when you log into your accounts, the bookkeeping is already mostly done because there's a degree of automation in reading the bank statements and providing the data into the ledger of accounts. Over the last few weeks, we've had conversations with regulatory authorities in the UK about financial resilience. There have been packages that have been provided to those companies, many of those companies, to try and enable them to survive in periods where they've been locked down and unable to function. And of course, practically, if you're a company and you're a director of a company and you're trying to make appropriate, well-informed decisions on what you're going to do with your business, not having up-to-date financial information inhibits your ability to make decisions. Therefore, we can see that companies who've used cloud-based accounting, because of the degree of automation, because that data is up to date, and because it's formatted into a simple structure which would make it easy for those entities to then share data with a lender, or other form of grant provider that's been pushed forward in the financial crisis, well, we can see that those companies are by definition going to be more financially resilient than those companies that are not up to date and don't have their financial data in a correct format to apply for a loan. On the consumer side, there have been a whole variety of different things that we've faced into recently. There's obviously people who have been furloughed. I don't know how well that translates, but people who've been not made unemployed, but have been told to stay at home and not come back into the workforce during the health crisis. And some of those now are going to move from being furloughed into being unemployed. There have been changing patterns of credit usage. We've seen people who've chosen to pay credit but haven't kept up with their household bills, or vice versa. We've also seen people whose ability to have any leisure spending, their ability to do anything for their family, friends, and loved ones has been diminished by their changing financial situation. And their ability to use money management applications to get a real up-to-date, practical grip on how they're budgeting across all of their financial affairs has been materially improved by having open banking. So they're just two examples of how, particularly in the current crisis, open banking has played a critical and important role.
Yeah. Picking up on that topic, Gavin, we have a question here from our audience, from Vitor Coutinho de Barros. He asks, how do you see the impacts of the global pandemic for the development of open banking?
So we've witnessed in all markets a concentration amongst the regulatory authorities in getting this done. Even in the United States, which has had has the highest per capita penetration of fintech usage that uses data aggregation, which I guess is the genesis of open banking. In the US, over a population of 328 million, there's about 110 to, roughly 110 million US consumers and businesses who are using data aggregated from multiple accounts. I think the average in the US is about 15 to 16 accounts per aggregation. So that includes pensions, insurance, investment, brokerage accounts, as well as credit and current accounts. But we've even seen in the US the Consumer Financial Protection Bureau step in and say that they're going to try and push ahead to a more orchestrated regulatory framework through the revision of the Dodd-Frank Act. We've seen in Australia, in India, in Canada, in New Zealand, in various countries in Southeast Asia, in Japan and South Korea, a lot of push towards accelerating open banking. So I don't think it's going to have a material effect on the way that the regulatory authorities are approaching it, other than a positive one. The only thing that you could look at was from a fintech perspective, if you're a new startup looking for your first funding, your seed funding, your Series A, doing that without being able to see people face to face is tough, because people invest money with a lot of trust, and trying to establish trust over digital channels is slightly tougher than being able to shake somebody by the hand and speak to them and look them in the eye. So it may impact in that respect, but the technical implementations for this should be not impacted.
I see. Gavin, and what about Brazil? Brazil, it's going to start implementing its own open banking system in about 1 month and a half. What is your expectations for this implementation here?
Well, look, if we think about the stages of implementation, as I said in my talk, I've been working at times quite closely with the Central Bank of Brazil on this for at least a couple of years. I've hosted them in London twice. I've hosted them in Edinburgh. I've been out to work with them in Sao Paulo and by video conference in Brasilia. They've been really learning and trying to soak up as much information from other markets. And I think they've understood the issues very well. They've written a good guideline. I think their understanding of the sequencing of doing the reference data first, which is the phase that's just completed, the design for that's just completed, and then moving into digital identity, and then bank data sharing, then bank payment initiation, and then on into looking at other financial verticals is exactly the right approach, the approach I would recommend and have recommended to them. The only thing that's slightly concerning me about the implementation is its pace. I think it's going a little too fast. And it would be, I know there's a desire to get things done, but I would be just trying to think about making sure things are done in a reasonable order and giving things a bit of time to bed in as you go. Certainly from the experience we've had in the UK, the speed we went at things over the first 6 months meant that a number of things had to be done again because they weren't done in the right order. So my single most important piece of advice is do the liability model first and build everything out from there. So make sure that your customer is at the center of the page and you don't put the bank or the fintech at the center of the page. Put the customer at the center of the page and make sure everything works for them. Then you won't have to go back as an industry and keep redoing the technical solutions to make those things work. So, but I think on the whole, Brazil's in a really good place. It's got the data privacy law. It's got clear direction from the central bank. It's forming a coherent governance structure. I'd maybe like to see a bit clearer representation of consumers and businesses in that. But on the whole, I think Brazil scores very highly for its framework and its approach.
That's a interesting advice for Gavin. Just one we have time for just one last question now. What Brazil is now implementing also instant payment system, which is called Pix, and we will have Pix and open banking starting operating here in Brazil about at the same time. What is your expectations for 2021 for the banking sector and the finance system here with all these changes?
Sure. Well, if the account aggregation of open banking can give you visibility on the data, the payment initiation and the faster payments, and the ability for a data recipient to be an initiator of a payment enables customer journeys to be much more elegant and easy to perform. The combination of being able to see the data, understand it, and then be able to move money to orchestrate it takes a lot of hassle away from the customer and makes it easier for them to perform what they need to perform. So the order that you've got the open banking and the new faster payments is right, because by the time you've got through the data aggregation piece, the faster payments piece will be live. And then when you introduce the third-party payment initiation, it'll be moving over much faster rails than it could currently operate on. So I think the other thing, of course, in Brazil, the regulatory authorities are very keen to make sure that the system, the financial system, remains very stable and secure. But I think that can be done in a way that also enables innovation to take place. And, I think from a Brazilian perspective, one of your historical issues for both consumers and businesses has been the highly expensive lines of credit. So I'd like to think that the way these things are going to combine might make it easier for proper competition to enter the credit landscape and try to make that experience for Brazilians superior to what it has been over quite an extended period of time.
Is this also really a competition revolution? Can we expect that as well?
Yeah, if you get the qualities right and the data recipients are able to rely on the service and the big banks move into the data recipient role, then the speed of innovation will drive more competition will drive more innovation. And if that's orchestrated with a very strong hand on the tiller by the Brazilian regulators, it'll drive materially better outcomes for Brazilians.
Great. All right. Gavin, unfortunately, our time is up. We don't have much more time for our questions, but I want to thank you and thank you, our audience, for participating here on this talk. It was really great to hear from you, this experience from the UK, and I think it's really a lesson here for us in Brazil. So I'll switch back to Portuguese just for a moment.
Thank you.
Queria agradecer a todo mundo pela participação, por acompanhar aqui a nossa conversa com o Gavin, e lembrar que hoje, às 19 horas, nós vamos ter mais uma conferência, mais uma palestra, um debate aqui do Future of Money, com a participação do Gustavo Franco e de colunistas convidados da Exame. Então, não percam e acompanhem os próximos eventos. Thank you, Gavin, so much. I hope we can have you here next time and participate in other talks here with Exame.
I look forward to it.
Thank you so much.